Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is February 28, 2018. The market I'm going to talk about today is wheat. The ETF is WEAT. What we have here is a big move that took place today and a couple of interesting aspects that I want to sort of address here. So with wheat, we have the trends are short, intermediate, and long-term all point to the upside. The technicals, I don't think, have just really caught up with the movements that are taking place. We've been beaten down with wheat for such a long time that they're just going to take their time to actually show a positive rating. But the seasonals are pointed higher, volatile as they are. But I just wanted to I'll point out a couple things here. So with the movement, we just barely are touching into overbought territory, but nothing is really popping up here yet as far as pivots and things of that nature with any of our major indicators. But if we pop up the next level here, the Deep Dive Pro alerts in wheat right through here, we actually had a dazed high. I don't talk about this one so frequently, but it's under the reversal patterns, but it's an early reversal. It just simply means that the market has had a major thrust, and that thrust has put us into just barely into overbought territory, and so it warrants some attention. So watch your positions closely. That's kind of what that represents. Easiest way to represent this is to actually just take a look at wheat on a daily bar basis. So here's wheat. You can see that the trend to the upside, the systems are long, taking advantage of this, and kind of interesting, something that doesn't happen all the time, but one that I do want to address. Now, soon here, we're working on a new website that will allow us the opportunity to market and sell some of these pro alerts. So if you're on the TradeStation platform, one of the indicators you'll get, obviously, is dazed. But we also have, if you can see in the pop-up window, something called Crazy Day High Target. And what that means is that during the course of the day, when a market is beginning to rally, if it gets into a certain phase, it may not make the extreme move that we saw here in wheat, but when we do have a day in which the market is making a bit of a thrust in the market, we'll make a projection as to where the market theoretically should be heading. And this is happening during the day, not at the end of the day. And so you can see that the high for the market was at, this is the high, not the closing, but the high was 499 and a half. And the kind of hard to see there, but in the red, in the little pop-up window while I'm holding the cursor down, the crazy day high target was 499 and an eighth. And so what this means is that the market was giving us a projection during the course of the day that if one were trading this on a short-term basis, which technically we do, but our systems did not trigger, but if one were to be trading that particular market, the crazy day high target, and it would actually work on the low side as well, would give you an idea as to where the market is likely headed. So just something unique that sort of popped up today, so I wanted to highlight it. So with the market having had a nice little move with a high level and the closing at 492 and a half, here is the daily bars here again for wheat, and it's running up against this resistance level right here. So if I just kind of pull that across, you can see on a closing bar basis that that's essentially where we are right now. That number for this resistance is 493 and an eighth. So we're essentially there right now. Now we were able to break above the 200-day moving average, which is a pretty good thing for wheat, because it's been a while since wheat has done anything on the plus side, and so I think that it expended a lot of energy. That's where the crazy day and the dazed high alerts are really pointing towards. We're up against this resistance. There was quite the thrust. Now there could be a follow through, but I think eventually, it could come in a day or so, it could even happen tomorrow, that we might actually come down and retrace a little bit down to the 200-day moving average and see how we react to this this resistance level. And so what will most likely happen is that we see a little bit of retracement, and when I show you the seasonal charts, you'll see that it may take a little while, and then we'll have another thrust here. So we'll see as to whether or not our systems maintain their long positions that entire time, but for right now they are long. So let's flip to the website, and here are the seasonal projections that we post for all the different markets. Now, full disclosure, I run these in the evening time. They're typically done by about 10 o'clock Eastern Standard Time. So it takes about an hour, hour and a half or so to run all of the numbers for all the different markets, including the projections and whatnot. And so you'd be using this from yesterday, gives you an outlook as to, this is not the outlook for that day. This is when it was actually run, and then we have an outlook of bullish. Maybe that's not very, very clear. But you can see here on the 28th that we had a projection for the market to head higher. You can see a little bit of a retracement. Another surge should theoretically be coming, and then this is kind of the retracement that I'm referring to, where the market comes back and bases a little bit, perhaps around that support level that I was pointing to. And then by the time we get into, this is projecting out to the 10th of March, so we'll call it the first week or so, at least in the first half of March, we would see that retracement I'm referring to. And then we've got another potential rally according to the seasonal charts. So it's not done yet. But the dazed indicator and that crazy day that we had today, I think that the market just expended a little too much energy, and that we're kind of looking for some form of a retracement over the course of the next, say, 10 trading days. When it comes to the targets, this is today's close. You can see that there's really nothing holding the market back here. The support to the market is pretty far down here at 479. But if we're able to rally and do that little retracement that I was referring to in that secondary surge that would be coming sometime in March, theoretically, in that particular case, we've got some interesting resistance gaps that these are pretty far apart, that once we get to a level, there's really nothing holding it until the 501 level. Then if we find support there, then we're good up to 511, almost 512, and so forth. I'm not saying that these things are going to happen right away. But the point is that because it's been a while since we've actually rallied, the support and resistance levels, in this case resistance, there's gaps between the resistance levels. So just kind of giving you an idea as to what's taking place. With where the markets are right now, as far as what we're doing, the grain markets are actually one of our bigger producers right now, where we've got some nice open profits here specifically as wheat, and this takes into account normalization against the S&P 500. So we've got a nice little profit out here with multiple contracts. If we take a look at wheat as a whole, you'll see that we've got, I believe, 4 systems running right now. One obviously went off today, that 90-minute system, but then we've had one on the 22nd long, another one on the 28th, that was today, so we actually had 2, and then we had another system back on the 22nd. So we've got 4 systems that are long. Each of these are short-term, 45-minute, 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 90-minute. So these are short-term bars, and there's where I was talking about that if the market does retrace, and then we have a secondary surge in sometime in March, the 10th of March, just to give you a target, I suppose. That's not hard and fast, but give you an idea as to what we're talking about. These systems will probably liquidate themselves and then have another opportunity to go long the market, depending upon how forceful the retracement is, and if in fact there is a retracement. If there's not, then this is great, then our systems will continue on. So that's kind of what's taking place from this side. The other thing I wanted to point out is the market grades. For the grains as a whole, wheat is actually one of the better markets to trade, because it has these violent moves. That's what dazed is talking about. In the crazy days, they have these violent moves and then retracements, and there's tradable opportunities based upon that volatility across a lot of the systems. My intention is to eventually do a whole workshop on how these grades are produced so you have a better feel for it. But suffice to say that we have a lot of systems. We look at the systems and we look at not just their profitability, but we look at their consistency over time. And based on consistency, profitability, risk-reward ratios, things of that nature, we come up with a grading for the individual markets. So corn is actually, according to our style, harder to trade than soybeans. Soybeans still is a B market, and wheat is actually an A market with almost an A, A plus. It's essentially there. So that's will give you an idea as to why it is that I think that wheat's a good market to trade. What you want to do as far as the outlook, and just beware that because we had that that dazed high, just expect some type of a retracement. It was too big, I think, today. Market reverses just a little bit. It may not happen tomorrow, but in the next day or so, and then we have a surge, and then there'll probably another retracement, and then a nice little surge coming in in March, secondary surge, if you will. So keep watch on wheat because there's more tradable opportunities, I think, that are popping up here. So hopefully you enjoy the presentations. I do like feedback from people. So if there's a market that you want me to look at, as long as it's on this particular list, I can, and obviously it's worthy to be talked about, then in that particular instance, we'll go ahead and take a look at it. So we'll look at another market tomorrow, and I appreciate it. Bye-bye.